Hello, everyone, and welcome to this roundtable. My name is Maria, the head of retail at Reuters Events, and I will be your moderator today. I'm so glad to be joined today by these extraordinary professionals to discuss this juicy topic of demand planning. We'll begin with a short introduction from the panelists, and after that, we'll dive right into the topic. Don't forget that this is an interactive session and we have the Q&A function available. Make sure to submit your questions, and if you've got any, I will try to leave a few minutes at the end to answer them. Grab your teas, coffees, waters, whatever you have, and we'll begin with some introductions from the panelists. And I think, Troy, I'm going to start with you.
All right, thank you. Hi, everyone. My name is Troy Hicks. I'm the SVP here at Herbalife Nutrition. If you've never heard of Herbalife Nutrition, we're a global nutrition company. We've been around for about 40 years, and we're in 94 countries. I would say what makes us unique is that we sell our products through our vast distributor network, and our purpose is really to help people live healthier, active lifestyles through better nutrition. It's great to be here.
Lovely. I'll move on to Anthony.
Hi, I'm Anthony Lovell. I'm VP of Applications at Veralta. I have 20 years of experience in supply chain with a focus on strategy, digitalization, and demand planning. Right now, I lead the development of supply chain apps at Veralta, and we build apps on the Anaplan platform. And the real innovation here is that our apps sit on one data model to enable real-time planning and execution combined. And there's a real focus in the business processes around being event-driven to enable real-time end-to-end scenario planning for network planning.
Justin, I'll move on to you.
Hi, everybody. It's a real pleasure to be part of this panel. To be part of this panel with such people with such vast experience. And thanks for setting this up for us, Maria and Reuters. Just a little about me. My name is Justin Kim, Executive Director of S&OP in the color makeup category at Shiseido. So the areas that I'm responsible for: demand and supply planning, as well as global deployment to some of our regional distribution centers. And then just a little about my background. I have about 15 years of experience in the planning area. It's heavily been centered around demand planning. And I've been in the beauty industry for about a vast majority of those 15 years. With a little bit of consumer electronics experience prior to that. And then just a little bit about Shiseido. If you're not aware, we're a global beauty company with global brands that are distributed widely. We're in skincare, color cosmetics, sun care, and also fragrances.
Great. And last but not least, Praveen.
Hey guys, good morning, good afternoon. My name is Praveen Muttiru. I'm the Chief Architect and VP for Digital at Mars. First of all, Maria and the rest of the team here, thank you very much for being part of this distinguished delight conference or the seminar here. I'll start with Mars. Most of you know Mars as a candy company. We have Snicker bars and M&Ms, a lot of you know. But the bigger part of the business is pet care. We are the largest pet care for pet food and also pet vet services. So with that said, I've been with Mars around 2.5 years in the CPG world. I've been in architecture space for almost 20-25 years, working with several Fortune 500 companies. It's really a pleasure for me to be part of this conference because of two reasons. Because 3 years ago, Mars started the digital transformation, like how large enterprises start transformation. And we've been through a journey, learning new stuff and observing a lot of stuff. And we have some successes and we have some failures as well, but it'll be always good to take lessons from there and keep moving. But it's exciting for times for us to especially be part of this session.
Wonderful. I think this will be a very educational hour for all of us. And I'll move on to the question part. And I'll start off the conversation by asking, all of you this question, which is, when it comes to demand planning, what do you think some of your biggest barriers are? And maybe we can start with you, Praveen, with answering the question.
Yeah, so you're asking about the manpower?
Demand planning, sorry, yes.
I'm sorry?
So what are some of the biggest barriers when it comes to accurate demand planning?
Demand planning, got you. So demand planning, especially, we need to understand the consumer trends. That's number one, right? And then we need to understand the product selling, right? Which products are going more? That's number two. And most importantly, ability to address the spikes. How do we become a flexible supply chain to support the back-end model is important. So those three things I would like to focus on. The first one, understanding the demand. In the market right now, it's a seasonal aspect. Sometimes it's the dimensions that are changing are the COVID is a good one. People staying home, purchasing habits, eating habits, living habits have changed. So understanding those demand habits from the consumer point of view is important. The second point is when we look at what products are in demand, like let's say you need to understand your trade promotions, which is really key to CPG, right? If you have what kind of a promotions are happening in the market and how is the product movement happening, right? Whether spikes and stuff, that's very relevant, number two. And lastly, when such spikes happen, let's assume your customers are ordering as you see a spike in the order. How do we manage that? How do we be flexible to accommodate that? Because what is generally happening is when an order spike happens, all the safety stock and also whatever you allocated for other customers, it gets overwritten, right? Because you want to meet the first customer who's sending more orders. That will give a triple effect to downstream supply chain. So those are the three big different dimensions we are handling right now in terms of understanding what the trends are and how product sales are changing, what SKUs are important, what SKUs are more relevant, and also understanding if there are spikes coming, how do we address it from a downstream supply chain perspective.
Yeah, I mean, I would just add, I think this pandemic is a great example of this question, right? Is that traditionally most companies use historical data as the primary piece to predict the future, statistical, forecasting. But obviously, as they say, you can't drive a car through the rearview mirror. And I think that's true for demand planning. One thing that Herbalife has really been focused on recently is trying to establish these early indicators, as we call them. They're really a measurement of activity in the marketplace that we use to try to, correlate a prediction value. So, they're simple as how many new startup kits we sell, how many people are entering into the business as distributors, the activity of those distributors themselves. And then there's indirect indicators, unemployment, as Herbalife really provides a business opportunity as well as, servicing, some of the best nutrition on the planet. We create an economy, and we see when unemployment goes down in certain markets, that has a positive effect on our business. And that is true most recently here in North America, with the hospitality industry and the airline industry. Our business has seen significant growth of people really looking for, in some cases, a passive income, and in some cases, to start up a business itself. So it's these early indicators that I think are probably the most challenging to find in your business, but really give you the dynamics to see what the changes are in the marketplace before they actually happen. And, that's something that was a big focus for us.
Yeah, and just to add, I think really, and you hear this a lot in the news, that the pandemic has pulled forward some of the existing trends, and I think it's also created some new trends that haven't been seen before. So I think in terms of the existing trends that have been pulled forward in our industry, in the beauty industry, the digital / the virtual try-on, that's been a big a source of a way to test on products without having to physically touch a tester, or augmented reality in terms of putting on a lipstick shade without having to physically put that on. I think that's been very accelerated, and we've been pushing that as a company to get that up and running quicker than we had planned to. And then obviously the other thing is, in terms of existing trends, have been the push towards D2C. So D2C, specifically the e-commerce side. And what we're seeing is not only on our own, because we have our own, Shiseido has our own e-com infrastructure that we sell direct to our consumers, but also the retailers. So for us, the biggest two retailers are Sephora and Ulta. They're moving a lot of their business into DTC. So that has its own impact. So that specific impact on the DT, on the move to DTC, it actually has a double whammy impact. It has an impact of pulling inventory out of the trade, because there's less of a need to source inventory for all of the individual brick and mortar stores. And on top of that, we have the beauty industry has a different set of problems, I guess, than Herbalife. I don't think it's a secret that it's the beauty industry's been seeing -20%, -30% decline in revenue. If you see any of the quarterly results from L'Oreal or Lauder and us, that's kind of the trend. More so on the US and the EU side. So that it is a double whammy. The mix change in the mix of distribution, as well as the consumer consumption trend, both pointing towards an inventory reduction in the trade. So that's something that we've had to manage. So the approach that we've kind of taken is to really, when we're planning out the business, we're looking out, at least 12 months in advance, a rolling 12-month figure. And built in that plan is a set of assumptions. So there's a set of assumptions on distribution. There's a set of assumptions on consumer retail consumption. And I think the strategy that we've taken is to be really close to what are the data that are coming in, and how is it validating or invalidating those initial assumptions that went into our plan. So for example, if it says we're really keeping close eye on weekly sell-through data that we get from all of our retail partners. And we're obviously also tracking retail sales from our e-commerce side of the business. So it's really getting close to the keeping very, very close tabs, granular and both granular and macro on both of the assumptions that we've made, and making sure that we're adjusting as needed, quickly as needed.
I think there were some common themes here that you guys have mentioned, and I think the pandemic is a big event, and since we started this journey to revolutionize planning on the Anaplan platform, we've kind of felt that events are getting bigger and becoming much more constant. So, and we think there's something that as supply chains have kind of managed the status quo quite well, but we've never really been that good at managing events. Now, events can be a competitor price action, it can be a new product launch, it can be Christmas, it can be Halloween. When you think of all the stock that gets sold off after Christmas at discount, that erodes most of the Christmas profit for many retailers, we've just always felt that this is something that we needed to do better. And I think you guys have all mentioned the things that we think need to be done better to manage events well. And if we manage events well, so I don't think the ROI for revolutionizing planning is COVID. I think COVID has shone the spotlight on that we have more and more events and more volatility, and the ROI is becoming better prepared to manage these kind of events, be it a supply shock in Asia, a natural disaster, price changes, FX fluctuations, political environment. We have all these other things going on as well as COVID. And the way we see that, I think the first thing you've all mentioned is the need to sense or to have the external data to see what's going on in the market. But there's a lot of noise with that. So we need the intelligence to discern what's a shift, what's an important trend shift, and what's just noise because it was hot in Dallas today or it was cold in New York yesterday. So we need to be able to filter out the noise. When we've done that, we need to be able to quickly remodel our demand plan. So that's where our event-driven planning comes in. At the click of a button, you can quickly change the demand picture. Having done that, and this is where I guess the connected piece or having one data model comes in, what we don't want to do is finish a demand plan, sign off a demand plan, wait a week to send it to inventory planning and so on. In real time, we want to be able to create a few scenarios. We want to see, do we have the safety stock, as you mentioned, Praveen, or not? If we don't have the safety stock, do we have the raw materials? Can we do the production? So having sensed significant shifts, we want to quickly make intelligent decisions. If we can quickly make an intelligent decision, then we need to be able to quickly orchestrate a network. And that's where a kind of planning platform like Anaplan comes in for us so that you can actually connect your customers, suppliers, and get that information up and down the network quickly. So we can't always overcome long lead times and the realities of production. But what we can do is we can be very nimble and agile in our planning processes. And then as our networks improve and become more agile and resilient, then the brain is in place to take full advantage of the network configuration changes.
I think, Anthony, you touch on something that I see, certainly in my wheelhouse as far as the speed in which that interval takes place, right? So you recognize these changes, and it's really how fast can you shift gears to be able to redeploy your plan, the intervals in which you're planning in, and then behind that, making sure that you have the responsiveness in your operation to be able to shift with that in the same pace. But these are all obviously challenges that are the marathon that never end. But I do think speed is key to what you to your point.
I mean, I think that one of the other challenges with planning as well is, if you think about it, how we've always tackled planning, we say everything starts with demand, okay? And then supply falls in line with demand. I don't think that's any longer the case with complex global supply networks, as we've seen, and COVID moving around. It started in China, and lots of us got a supply shock from China. So we actually had to the supply pictures changed. How do we flush back into demand? So having these bi-directional processes, non-linear processes, is being able to manage those is key as well, I think.
Yeah, that's an excellent point, Tony, what you brought up. I think what we have taken an approach is doing an end-to-end planning. That's why we call it end-to-end planning from a prediction point of view, right? Yes, these trends, this noise, this data is needed to predict. But again, to simulate, what does it mean from a demand? What does it mean from inventory? What does it mean from a consumption point of view? What does it mean from a promotions point of view? So we are looking at from an end-to-end point of view from a planning perspective. This is not only because of this disruption with COVID, but this is a kind of a better practice, I would call, even like a purposeful enablement of doing that end-to-end planning is what is helping us to differentiate where we are today.
Yeah, I think, and also Anthony, you touched on a point that I also wanted to make in terms of I think the organizational agility is actually has been escalated as a key core competency across larger global companies, because the quick decision making that's needed now, whether it be taking, what are we doing on the demand plan side, what are we doing on the supply plan side, what are we doing with procurement, manufacturing. I think the robustness of those relationships across the cross-functional areas in the company is actually more important than ever now, because whether you react a month earlier or 2 months earlier can have a direct impact on the P&L. Whether you pounce opportunities as they come, and we have the structure in order to make sure everyone's aligned. So I think really it boils down to the quality of the S&OP process. And in order to have a quality S&OP process, it's what are the data that feeds that process, who are the players, how easy and quickly can the decisions be made. I think these are all of the things that really are bubbling up, and that's going to kind of differentiate leading companies versus companies that are going to.
I think that's a great point, Justin. I think, we focus a lot on, if it's people, process, and systems, right? So we focus a lot on process and systems. And I think as we move into this new era of end-to-end planning, the people, the organization needs to change, because if we're going to have rapid decision making, we need empowerment, right? So I think empowering is giving people the information, right? Giving them the tools and the process, but we also have to empower them to make the decision. It's no good if they can see 100 responses and they have to wait till the end of the month to get the VP of supply chain to sign it off in a planning meeting or an S&OP meeting. That's no good. We have to actually look at the decision-making processes and empower our people to make our supply chains react more quickly.
Yeah, that's great, Anthony. I'd just like to also add a different aspect we took is how do we look at our supply chain with a segmented view, right? Because not everybody is the same. Not every size fits the same, right? So we segmented our customers, we segmented our suppliers, we segmented our orders, and we segmented our inventory and SKUs and products so that we can clearly see what segment we need to cater, that we are not losing big, right? And then causing a bigger problem versus how do we need to zoom in? And especially COVID helped us to be more precise and more directive on that. And it forced us to get this segmentation of the whole supply chain end to end.
Yeah, I think supply chain segmentation's a key. I think it's a good way to get some agility, right, as well. So I believe in the, if everything moves at an average speed, some customers are overserved and some are underserved. I think that's the Harvard Business Review from 1997 or something. And so we actually implemented that at Sony in consumer electronics, and we segmented our physical supply chain. So we moved our highest value goods to air freight and global production, and we have more local supply chains for, medical suppliers and lower value products. And we reduced the inventory to sales ratio by 90% doing that without affecting service levels. That was through pure physical supply chain segmentation, looking at these kind of things. What we're increasingly seeing as well is leading companies are doing process segmentation as well. So we're looking at the business processes and we're saying, okay, these supply chains need different processes to serve them. So in an emerging market, we're actually going after market share. In an established market, we're managing more cash cows, and recognizing that the planning processes need to be segmented as well is really kind of at the front of what some people are doing now.
And I'll try to take you all back a little bit back in March. Not everyone wants to go back there. But when it comes to inventory planning and demand planning and executing that plan, what do you do when nothing that you planned goes the way that you planned, which is basically what happened back in March to all of you with different results depending on what you guys do. What are some of the lessons that you've learned after that? If something of this extent, maybe not exactly like this happens, do you think you'd be ready to, or are you ready now to anticipate it and flex your operations around it?
It's an excellent question, Maria. I'll take a first stab. I think we went into this situation where orders were erratic, right? So going everywhere, and it's hard to manage. So first thing we did is we first wanted to identify to respond what are these orders, right, that are erratic, and using our predictive modeling, using our analytics team, we took help of the data to understand which customers are popping up these orders right away, right? So that's the first thing. And then once we identified that, then we started to understand from a customer perspective manually, because we don't have systems to interact both ways very efficiently. So we called the customers and asked, what is the reason for these spikes? Understanding it from a customer perspective, because we are a B2B shop, right? Most importantly, when you talk about customer, it's like Mars is talking to Walmarts and Targets and stuff, where the order spikes are happening, and we are trying to understand why the order spikes are happened and what could we do with our existing inventory. So some of that, what could we meet and how do we negotiate that, right? So that is the immediate first reaction that we did. And then from a response point of view, then we looked at what is our supply chain, what materials we have, what products we can have, and how can we fulfill that from a response perspective. That is the second step we took. But this is really not planned. Let me put this very openly. This has happened as we are getting to react and we learn. But immediately we took the help of our data, help of our teams to build that, identifying these outliers or erratic orders we call. That is the first fundamental step we started to address from a plan perspective.
Yeah, I would share. Looking back on March, and I think I used the quote that a distributor used with me once, is that through crisis brings clarity. I think it was an opportunity to really see where the stress points were in our supply chain, and really, renewed our interest in things like business continuity and supplier partnerships. What we went through in the nutrition industry specifically is we're in 94 markets. So this happened at a different pace in every market. And it was based on the amount of disruption we saw from the pandemic. So as things started shutting down, these roaming government quarantine policies took place, the ability to access product was disrupted. So immediately, specifically in North America, we saw early April, our numbers started going down. And we immediately thought, okay, we're going to have to pull back. And within, I would say, 2 to 3 weeks, we saw an instantaneous hockey stick up that really, never saw its ceiling and continues as we speak today. That in and of itself, nobody had pandemic in their playbook, but because we are designed to be responsive and have a network that services 94 countries and a semi hybrid centralized manufacturing environment, we carry a lot of inventory. So we were able to really survive through that upside better than most, just because of our supply chain, not purposely designed for a pandemic, but certainly the architecture to support a global network. And through that, we were able to really take advantage of the organic growth that took place in nutrition as people wanted supplements and health and wellness and immunity products that maybe didn't want them before. And I think through it all, it is definitely putting a renewed interest on that flexibility piece and that responsiveness and that partnership within your supply chain, especially upstream, and making sure that you have the protections in place to absorb traditional variabilities, but also in the extreme case, you have at least line sight to continuity plans that you can invoke that allow you to really, stay in front of the curve, if you will, or at least make the best attempt to.
Yeah, just to add on that, I think for, just thinking back in, where we were back in mid to late March, that we were a few weeks or a months back in February, we were hearing, obviously the pandemic spreading in China and throughout Asia at the time. And that's when we kind of really saw the initial supply shock that came in, because for beauty products, a lot of the less value add product, the components are produced in China and in that region. So we felt, the supply shock first, and then in the US, we saw the demand shock subsequently thereafter. So it was both, basically, if you look at the US at the time, from late March to late May, basically most regions in the US were shut down for retail. So, in that environment, which is absolutely unprecedented, obviously for both Praveen and Troy as well, I'm sure they felt that impact. We really relied on the commercial organization to guide us from a demand perspective to say, what does it look like? So that the sales and marketing organization really provided some guidance on the demand piece, so that we can understand what are they thinking in terms of the assumptions that are going in for gross revenue for the next 12 months. What does that look like when things are closed, when we're only operating certain channels and only at certain capacities? So I think for us, we, on the demand side, really relied on the commercial team to come through with their understanding of where the marketplace was, especially in the US. And then on the supply chain side, we quickly reacted to that information. We, did all of the necessary changes we need to do on the granular level on the demand plan. Quickly updated our policies on inventory, on safety stock. Quickly cut what we can from a purchase perspective on both components and finished goods from our vendors and factory. And also our factory was shut down for a period of time. So again, I think the collaboration across the different cross-functional teams was a key thing we relied on. And then the rest of the supply chain agility piece, how quickly can we react to what the business is telling us that this is where the business is headed. And then quickly, we do push-pull against healthy debate across those assumptions. Here's what we thought, here's what actually is happening, and then quickly changing along the way. And so we're getting out of the demand shock. I think from a supply perspective, we're pretty much back up to speed. And the beauty industry more broadly is clawing itself out of the demand shock that we've seen from the pandemic. And Right now, the biggest challenge for us is it's the changes in the consumer behavior, which we cannot map that to history at all. It's never happened before. So, for example, the masking trend is impacting, lipstick. The consumption on lipstick is going to be impacted by the masking trend, but it elevates other consumption. It elevates skincare. It elevates health and wellness, like Troy would know, it is seeing right now. And so we're kind of having to really dive deeper to understand the mixed implications of all of the changes that have happened and are continuing to evolve as we go. So
yeah, I think what we're seeing is, luckily, so as Troy said, and his network was quite prepared for a large uptick in demand. So fortunately, he's been able to take advantage of it. But fortunately, I think agility and resilience were already emerging as themes before the pandemic. So some companies have actually we've been working with companies for years on preparing and improving their agility and resilience. So I think those that were well prepared have fared much better than those that weren't. And I think we'd seen for a number of years that the focus on efficiency in supply chains was starting to cause a lot of supply chain disruptions as our supply chains became more and more extended across more and more vendors and across a bigger and bigger geography of supply. So I think we'd got to the point where there was just a natural need for more agility in supply chains anyway. And luckily, lots of companies had actually been taking those steps. We've kind of created the software already to help them do that. So that's been good. And actually, I saw an interesting survey from McKinsey the other day, and they're now saying that 44% of companies would sacrifice short-term profit for increased resilience. So I think there's a real now focus on that.
I think I want to dive a little bit deeper on the point of the consumer and the data as well. How do we get that data? How do we make the decisions based on it, even if we don't have that historical background to it anymore? Technological tools that can help us decode that data a little bit better. If that makes sense.
Yeah, I mean, I'll start. And this is, I think, something that is emerging for us as a company, and is the world of AI, and trying to apply AI in a way that allows us to really get that insight and that correlation through that data mining exercise, as you speak of. It's something I will be just transparent about. We're on probably the infancy stage of, but we do believe that is really the future, is how do you connect these early indicators in your marketplace? How do you connect the activities of your customers and ultimately our distributors who we service, and correlate their activities to a predicted value? And that's very difficult to do, as I said, using data looking backwards, and it's all about trying to figure out how to mine that and connect the dots to find where the predicted values are. I think AI is that tool of the future. It's just something that Herbalife is still trying to get our arms around and figure out how to harness it in the best ways. So that's one. The other one I would say is probably specific to Herbalife is that we have hundreds of thousands of distributors in 94 countries selling our product, and we're a very high touch type sales channel. Our distributors are on the front line with our consumers, and our consumers provide immediate feedback, not only to what their demands are, but innovation and what new trends are going to be, and what their experience requirements are. And I think consumer experience is a big one. It's as important as the product is. So all that feedback and creating the channel for that feedback has been invaluable for us in the way that we steer not only our company, but certainly our operation and our supply chain itself.
Yeah, that's. I'll just add to what Troy is saying. So we we realized this early in the game. As I said, as we were reacting, we engaged our data team and analytics team to drive and leverage AI for a couple of things here. One is you need to understand the signals and the trends, as we talked about. That's the first thing. What is changing in the market dynamics? What is really trending, and how do we take those trends and put it in our modeling? That's number one. Number two is also we need to understand the three-step process. One is what is the data that we have, either from the past or the data that we have right now that we can use to get this model. Second thing is we need to understand with our customers, can we partner with our customers or B2B model to see what data they have and how do we combine together the forces, right? So that's the second step. The third step is what is the data in the ecosystem? It could be general retail information, purchasing trends, living habits, moving trends, that data, social trends, take all the data, which we have not been doing, and then put it in the part of the planning process. So taking that evolutionary step of what you have, what our partners have, and what the ecosystem has, to get that kind of a visibility or transparency, I would call, right? In terms of how do we convert these digital signals or these trends into relevant planning aspect is the bottom line to get to that consumer kind of an experience. It's not one stop or one step will help you here. We need to do all these three steps in active mode to get more closer to the consumer trends to understand.
I'd like to also just touch back on Troy's comment on the AI and the data mining and the AI piece. I think the quite the challenge on that side with machine learning and AI is availability of data. When you basically boil down AI, what is it? It's just about availability of billions or trillions pieces of data that you can feed through a machine learning algorithm and spit out some sort of correlation. I think the trouble that I've had is always as if you're not an Amazon where you're dealing with DTC millions of billions of transactions on a second on a minute basis, it's really gets difficult to funnel that through to any sort of machine learning algorithm to get anything of value. I think that's where I struggle with in terms of how do we get there as CPG companies, as companies where we're limited in the amount of data that we have. We have obviously all the interactional data with our customers. We have the sell-through data at the most granular level possible, but we don't have minute by minute click-throughs or minute by minute, what's in people's baskets and what people have deleted from their basket at what time, and all of these things I think hamper. It's a competitive advantage obviously for Amazon where they're eating everybody's lunch in terms of retail. And secondly, that piece is, how do we sell that to the business, and how do we know that, for example, the holy grail for me when we're looking at demand and supply planning tools is, what is that golden nugget of information that I can use to as a leading indicator to adjust my demand. But then when you think about it, it boils down into convincing the leadership to say that this leading indicator is correct, and we're going to make a big risky change to our plans so that we can capitalize on that. But it's about the level of confidence that that the rest of the organization has on your data, on your explanations of that data. So I think it's a very long process. I think, and maybe Anthony, you have some views on this because you're really close to that on the tool side, obviously, but it's a struggle. I think it's, we've always tried to, what's the next evolution on getting at those leading indicators and using them. I think, one example that I try to keep close tabs on is like monetary policy even. What is the Fed doing? How much money are we pouring into stimulus? There's, a 1.8 or $2 trillion stimulus package that's coming up. That's going to impact consumer demand. And so, okay, so how do we distill that into a call it an executional SKU level forecast? That's a big challenge. And then how do we have the company rally behind that? So
I think there's no doubt that AI is data hungry, right? And the more information we can give it, the better. And clearly Amazon has an advantage, as we can all see, because, they have, if you've got a big brain, isn't it great to feed that big brain with all the data and have an agile supply chain behind it? And I think that's where we want to get. And I think, Praveen, I think part of the problem we have is we only have the internal information, right? So we've got to start getting outside of the enterprise. So as Praveen said, he's got to start working with Walmart, yeah, to increase the information coming into the brain so we can compete with Amazon at this level. And we also need to go backwards, because I think it doesn't matter how good the brain is, if it doesn't have any knowledge, there's not a lot it can do. So if we try and put a brain on demand planning, but all we give the demand planning is the last 3 years history, that's going to be no better than a statistical forecast. We need to enable the brain, as we said with people, process, systems. We need to think of the brain as a person, and we need to empower it to make decisions. So we need to feed it with information. So it needs to be able to see not just into our customers, not just the weather, not just pricing. It's great Amazon can test all these different price points and see elasticity and everything. If we had more information, we could better see elasticities, but we also want it to be able to see into the DCs and the inventory networks, because the reason why sales have gone down maybe just because we ran out of stock, right? Or some supply issues. So I think that's all just part of the case for having end-to-end processes, network-based planning, having, one data model, and bringing more and more external data into it. And then I think AI will become more intelligent. I think as well, one drawback's always been that it feels a bit black box. Nobody really likes putting information into a system and just getting an answer out. So one of the things we're working on is making that more parameter driven, and so you can see some of the logic that the brain's gone through, so you can understand the output. And I think some more progress there will be key. But I think it's definitely got a massive role to help us understand, what's a trend and what's noise, and be able to respond more quickly. We know, for example, that the weather's changed in New York, right? What do we need to do about it? If we know the next 2-week weather forecast, we can choose how to respond.
I think it highlights a point as well that I see, in my 20 years experience in supply chain, is that organizationally we're seeing a shift too in the way that we build our teams. Data, as they say, is the new gold, or the new oil. And I'm seeing, my talent and my need for more data scientists equal as much as planners, right? So, my supply chain organization, is full of systems intelligence people, information people in that data science discipline, to continually chop wood at these emerging technologies and opportunities to figure out how to harness this data. And as you said, getting it out of the enterprise and getting it into the marketplace and pulling that information in. It's not a perfect science, and we haven't necessarily solved the complete puzzle yet, but at least in Herbalife's case is that we see the light, we see the North Star, and we're working towards it, and we are seeing results from it. So we are getting, and maybe not to the Amazon level, but we do have an advantage in the fact that we're able to get a complete read on hundreds and thousands of our direct sellers or our distributors, and we're able to really, and where we're at now is just trying to figure out how to harness that, as you say, is that it's a haystack syndrome, if you will. And I think data science is emerging as that new discipline within supply chains to figure out how to decode all of that.
I think interestingly, what we have seen on the data science piece as well is, so a lot of planning has been quite devolved in the organization and quite localized. And some companies, and I don't know which is the right way to do it, they're kind of centralizing that. They're saying, okay, AI is a central discipline. We need to be looking at these trends centrally. We don't want a data scientist kind of in every sales department around the world. So they're kind of making that a core corporate discipline. And as you said, a couple of years ago, we didn't have any data scientists. I actually spend increasing hours of my day speaking with our data scientists now, because that's just the way the market's going.
So someone had a comment, data, garbage in, garbage out. So this kind of poses a question for me, and Justin raised a good point earlier. We do have loads of data from a lot of sources, but do we have the right data? Do we have enough quality data to put into the big AI brain? Because that might be the issue of the reason why we can't really make decisions based on the data we already have. We might not actually have the right data sets in there.
I think the brains have to learn sometimes as well. So we can run little tests as well, especially in a D2C channel. We can put a product out at different prices. You can try things in different channels, and maybe some of the way we go to market needs to change a little. So rather than just making a big assumption at the start of a product launch, we'll probably want to do more testing to get more learning and more training for the brain. So then we do launch, it's already primed. So I think definitely data is key. I think there's a lot we can do to help ourselves with data by integrating with customers and suppliers, getting the external data, and even looking at our NPI, NPD processes to improve them.
One other point Justin made was how do we convince leadership that this is the right decision to be made, this is the right investment, this is the right plan. And maybe the three of you can answer that curiosity. And Troy, you've had a little bit more experience with AI. How do you prove that ROI on that investment?
Well, look, I mean, you definitely have to prove its worth. I think through demonstration, right? Is that and the way that we think about it is that we work and trying to grow things inside out. We don't necessarily, jump in the deep end and ask for millions of dollars to implement AI models throughout our organization. We start with a small simple model trying to predict a small simple thing, and we prove its capability and purpose around that, and then we try to scale it and work it up. And through that journey, we really start tapping into things that are are really working, and then we can certainly monetize the value of that to be able to sell it to our executives to make those investments. For us, it's less about optimization of supply and inventory and more about resiliency and servicing our distributor. And I think with that common culture, all our decisions, all the investments we make are really under that common purpose, which is resiliency. So if I can prove out that an AI model will help us build resiliency to service supply to our 94 markets, then certainly, my company is going to back that. But again, grow it from the inside out, start small, and then prove it over time before you scale.
I would second what Troy was saying there. Exactly the right path to take. So commenting on two questions, right? One is the data, garbage in, garbage out, and then also coming back to the question you asked, how do we convince the leadership? So the first thing is, see, data, there's two schools of thought. One is you standardize your data model and make sure data is pristine and everything is bulletproof so that you're having that consistent results. The other school of thought is let the data be real time, dynamic, schema on reads, schema on writes, right? So you can have multiple data sources coming to you, and how do you make sense out of that? That's the second school of thought. So both approaches are required. That's the practical examples we are seeing. So the data challenge is something that you need to address by improving the maturity in a couple of ways. One is definitely you can put a score on data cleanliness or data completeness. The second one is also the number of access channels you're getting the data from, right? So in those markets that we are not trying, or those access channels we're not trying to get the data currently, if you add those data, then it's definitely adding more probability for you, getting more closer to the estimation. That's number one. Number two, on convincing the leadership, we took the same approach, right? So we looked at our consumer service levels, customer service levels, metrics, what were the percentage of demand accuracy, and then what is the percentage of meeting the consumer demands, right, and customer demands, and take those benchmarks and say, is the new AI investment or the prediction models helping us to improve that scale of accuracy, right? If it's going more accurately done. And then we also, of course, I think Tony made a good point. It's not all about planning, but you also need to make sure your execution and your model supports that execution and you have flex. But if you can show those successes step by step, naturally people will see it. And we had this pushback earlier when we went into an AI model and showed to the business. They said, hey, we've been doing this for the past 50 years, 40 years, and we know how to manage this. We know its prediction. We know what we can predict from our tribal knowledge, from whatever data we have, right? But those are overwritten by when we show the AI models. And most importantly, Tony, especially that simulation is a great example, right? When you were able to simulate saying what if scenarios, that is where the whole power of AI is coming into the picture. And that's how we're able to convince the leadership to invest in AI and also adapt the AI models for further planning and execution.
Yeah, definitely. I agree that simulation is key. To can't always optimize. Often we need to simulate different situations and different scenarios and then make the best decision.
So I'm allocating a few bits of time. We have a lot of questions coming in, and I'll read the last question. And this is Sandra, and she's saying, "I hope this never happens again. But if a second COVID peak appears, how are you guys prepared for the consumer demand?"
Yeah, I can just quickly kind of connect on that. So we thought we are learning when we started this reaction, and we learned from China, we learned from other parts of the globe, but it's different, and you got to still go through some process. But at least what this helped us as a alarm point or a pilot right now for us is what Tony is calling about: how do we build that resiliency in the planning process, in the execution process, and how do we become flexible, how do we become more agile and transparent, and where do we need to get this data, how we need to be visible, and how we need to address. So we are prepped with that kind of a work, but I cannot say we are bulletproof for the prepared for the next one, because the next one might take, I don't know what cycles it might take, but at least it won't be this worse, because we could say we are ready, we are prepared from a resiliency perspective. But again, we need to learn and we need to churn into those challenges as we accept them.
Yeah, I would also add, the two areas that we probably were least prepared for because they were least in our control, and certainly we didn't foresee it, and it happened actually later, which was the impact of labor and the constraint of transportation. And I think those lessons are something that we're actively looking at now. Is how do we better protect against those? Labor is one piece that we're looking at. How do we bring more semi-automation and automation into our production, where we're not as reliant on direct labor to be able to produce. Transportation, on the other hand, when COVID hit, the whole supply chain froze as brick and mortar retail parked their supply in storage yards because they weren't open for business, and or their foot traffic reduced dramatically, creating this huge shortage in China on trying to reload the set for the Q4 and the peak season of consumer goods here. And those two areas, I think, are ones that are top of mind for us as the question was, how do you prepare for a second COVID situation? So I think all the other areas, within our continuity plans, I feel pretty confident in. Will we, as was said before, are we going to be bulletproof? No. And will we be able to avoid all, or have a perfect plan? No. But at least I think we have a plan of resiliency and continuity. But it's those second to third tier things that are industry and or just global problems that are probably the most challenging for us, and probably the biggest puzzle we have to figure out how to protect against.
Yeah, and also just to add to that as well, is in terms of the labor piece, that is a big potential bottleneck. But I think having done contingency planning on both supply and manufacturing, we're much better equipped in terms of if something changes, that we have a backup plan. So we're deploying some third-party vendors to help out in terms of a capacity crunch. We have those relationships strengthened so that we can deploy additional capacity as we need to on the supply side. But it is like Troy said, I think it's hard to cover all the holes as they come, but do we have the right decision makers and the right set of information and the right forum to align and move forward when things change. And then also just to add is, having done this before, as global companies, we're better equipped to deal with it just naturally as well. If there is a second outbreak, or if there's a worse outbreak than in the initial outbreak, there's an organizational memory there in terms of how do we deal with shocks like this. So I think that's just organically in the nature of the companies now. So that also is a benefit as well.
I think we're seeing two things. One, we're seeing companies are preparing strategically. So I think strategically is to look at this empowerment, people, process, systems, end-to-end planning, this kind of stuff. But there's also some companies that can't change that quickly. And so some people want to know, what are people doing today? So I'll just go back to that McKinsey survey. I can tell you what McKinsey found out was that 50% are looking at dual sourcing of production and suppliers, so to try and get a bit more flexibility in the supply network. 50% are tactically just holding more inventory. Like, someone asked to what level, I don't know to what levels, but a lot of companies are actually, because they're not agile enough, are actually having to hold more inventory. Obviously, that's not a good long-term strategy, but now that inventory is in the chain, the ROI to become more agile is we won't need to hold that inventory for future shocks, right? And a lot of companies, I was surprised actually, 40% are looking at nearshoring. So they're looking to reduce the risk in the network by bringing it closer to home. Obviously, that reduces not just geopolitical risk, but also lead time. So that helps us to respond more quickly as well. So I think there's a lot of tactical stuff going on as people prepare. And hopefully as we come out of it, I think longer term, we'll work more and more on the strategic aspects.
All right, as we're very, very close to the end, I just want to get some final thoughts from each of you really quickly.
Yes, I completely agree with the three-pillar approach I would like to wrap up with. One is getting to know more about the demand signals, the consumer trends, and having that kind of a end-to-end planning is one aspect. Then again, making our operations more flexible and agile to be able to respond and react is the second one. And third one, most importantly, I would like to focus on is about the segmentation strategy that we talked about, right? So what processes are more important, what customers are more important, what suppliers are more relevant, and focus on those segment by segment. Then you can address this situation very easily. I would say very easily is a undermined thing, but at least you'll know what is the crown jewels that you don't need to worry about too much and you got them bulletproof, versus how do you want to address that. I think that's the three-pillar strategy I would like to leave away with, is my summary.
Yeah, I mean, I would probably end on more maybe of a softer side of operational management and supply chain, is that, for us, I think, it was really, and it continues to be around creating a culture and a common purpose around our strategy. And then the rest takes care of itself, because you empower the organization to make decisions daily around that North Star. So, at Herbalife, it is around servicing our distributor. Everybody's number one job is servicing our distributor, and you hear it top down from our CEO, to our frontline employees in our distribution center. So I think that is probably one of the most, amazing things that I have seen, at least in any company that I've ever worked for, is this united front that we're all rowing in the same direction. And we don't necessarily know what the future holds. And, we don't know necessarily how we're going to completely find our way, but we know we're going to be successful because we're an empowered organization around a common purpose, and our frontline decision making is centered around that common purpose. So, and if there's any debate internally, it always goes back to that North Star, and we find our way. And I think that has been a little bit of our secret sauce, if you will. The secret of our success is just that alignment, and everything else works itself out, be it technology, data, in building that resiliency to last.
Yeah, I just to conclude, I guess for me, it's two things. I think for us, that the most important thing for us is to protect the business and protect the P&L. in a period of crisis, having too much inventory is kind of the worst place to be. But balancing that is also, being able to service your customers in the right way, in the way that they expect. So it's managing both the cost as well as the revenue. I think that's going to be critical. But then also to echo on Troy's point, I think, at this, during times of crisis, like leadership is critical across all parts of the organization, whether it be from the C-suite down or to middle managers to people just joining the workforce. I think it's that sense of empowerment. It's that sense of growing in the same direction, like Troy said, and just having a common purpose within the organization. And I think instilling that sort of mindset and those culture and those values within the organization is very, very critical. When you have different factions across different teams, or in some of the other companies I've been in, it devolves and it becomes actually the issue of the company. So I think so for us it's been leadership is critical, and getting everyone aligned on the same sort of goal here is, I think, the overarching sort of thing that we need to really stay focused on.
Wrap up quickly. So for me, I think look at the network is key, and I absolutely agree with Praveen. Segmentation is a great way to get agility in the network. I wrote some papers on that 20 years ago, so I'm really pleased to see it coming back into vogue. I think planning, we talk a lot about alignment and flow in planning. So it doesn't matter how agile your physical network is, if the brain is not aligned with flow, so the flow of information and flow of goods through the network to make the right decisions from customers to suppliers, you're not going to perform optimally. So look at your systems and processes there. And finally, then I think once all that's in place, we need empowerment. So whether that's for people or for AI, we need empowerment to enable more rapid decisions to respond to things more quickly.
All right, wonderful. Well, that's it from us today, everyone. Thank you so much, Justin, Troy, Anthony, and Praveen for joining us today, for your time and for your insights. And thank you for everyone who asked a question and everyone who joined us today in the audience. Have a lovely rest of your day, everyone.
Thank you all, guys.
All right, take care.
Thanks, everybody.